This is Seth David from the world-famous Nerd Enterprises Incorporated, bringing to you another special screencast. This time we're talking about how a profitable business can go under. Knowledge is power. Make an impact by learning more. Call me right now at 866-945-8070 for information about private trainings. We record the live session for you so you can review it as often as you like afterwards. So how can a profitable business go under? That's crazy, right? The company's making a profit. How could it possibly go under? The answer is in the cash flows. And it's really important to understand this because so many business owners that I've seen make this mistake of just looking at the profit and loss. I had one client years ago who told me she didn't want to look at the balance sheet. She didn't want to know from the balance sheet. It didn't make sense to her. She didn't understand it. And she was fine without it. Until the day came when she was audited. And I was able to show her how the balance sheet was able to explain how she was able to sustain the losses she was showing, which is why she was being audited, because she was showing losses and the IRS wanted to know, how are you staying in business? And using the balance sheet, I was able to explain that she was staying in business because she incurred debt. And as we were able to prove, the debt added up to about exactly the cumulative losses over a couple of years. So it's really important to understand this stuff, especially if you're running a business or if you're a financial professional who's consulting with somebody who's running a business. You want to be able to be in a position to explain this stuff to them. It's so important. So let's take a look. We're using rental real estate as an example because rental real estate is a perfect example of a business model where there's usually a lot of debt on the books, right? Because we're going to buy this big property with all these rental units, and usually there's going to be a large loan associated with the purchase of that property. And that's exactly the kind of situation where we run into this kind of trouble, when we have a lot of debt on the books. Why? Because debt has a way of being split up between the profit and loss in the balance sheet. We have a total payment here, and I've got this effective interest schedule prepared. Total payment on this loan of it's really $1,200,000 is what we're assuming the loan is. Total payment is $7,783.18. Now that never changes throughout the life of the loan. The payment's always the same. Here's the problem. At the beginning, most of that payment is interest. As we go out in time though, and I only did this out for 30 months. Obviously when you do this, you'd want to do it for, on a 30-year schedule. But after 30 months, my interest expense is going to be only $6,500 instead of what I started out with, $6,700. So the point is understanding the trend. My expense is going to go down as time goes on. But the payment's the same. So where's that difference going? It's going to the balance sheet. It's going to how much am I reducing the loan each month. So as time goes on the loan, I'm showing less expense, and more of that payment is coming out on the balance sheet, which means that as time goes on, I'm going to look more profitable. So when I analyze this, and especially if I just project the income and expenses, well, look what happens. At first, I'm showing monthly net income of only $250. But if I go out to the end of 30 months, that monthly net income number increases to $1,150. So if I only look at this, I'm thinking, you know what, this is great. We're in great shape because we're just going to keep increasing the profits as we go, assuming expenses don't increase by more than we anticipated, and assuming we don't have too many people moving out in empty apartments, then we're going to look nice and profitable after a little more than 2 years, two and a half years, basically. So what does that mean? That means that we're not looking at the whole picture. It means that we have to look at the other cash outflows, because look what happens. In month one, and let me go back to the beginning here, my net income again is $250 for just that month, but I had to pay out $1,000 in loan principal. So my cash flow was negative by $783.18. And as time goes on, this gets worse. And why does it get worse? Because this is just by negative cash flow for 1 month. Each month, that accumulates. So after 2 months, I've gone negative by $1,500. Now let's say I started out this business before month one with $10,000 in the bank. Remember, this is a cumulative cash flow number. So if I started out with $10,000 in the bank, then where am I going to go negative? Right here in month 14. My bank balance is going to go negative because by then I've had each month with net negative cash flows, and it accumulates so that it accrued to over $10,000 in negative cash flows by the 14th month. So in a little bit more than a year, potentially I could be out of business already unless I have funding to sustain this. But again, I don't even want to use funding to sustain this unless I know I've got a way to turn this around, because the bottom line here is now we're looking at the whole picture and my cash flow is negative. let's look at what happens at the end of month 30, where remember, we got much more profitable in that month than we were at the beginning. The problem is our cumulative cash flows is negative by almost $15,000. So this is exactly how a company can go out of business even though it looks profitable. Even though when I run my P&L, I'm going to be showing net income. If I just highlight all these for the first 12 months, I'm going to look like I made a profit of $3,400 on this property. And in the second year, I'm going to look even more profitable. I'm going to look like I made a profit of $8,400 for the year on this property. Problem is that's not really what happened cash flow wise though. And that's where we can get into trouble. That's how a profitable business can go under, by not watching everything, by not looking at the whole picture. Now, if you want more of this, if you want to take this a little further, because this can apply to any business, I use real estate as the example because it's an easy one. And I've simplified these numbers. You can imagine when you're looking at a business that has a very complex profit and loss and balance sheet and statement of cash flows, it's going to be a little harder to see, but that's why it becomes so much more important. I used a very simple example here to make it easy to understand. So if you want to take this further, I have a whole series of videos on this right in my Knowledge Center, and I'll show you exactly where that is. Well, let's first go to the blog. Let's show you where the free stuff is. If you go into Nerd's blog, and I'm going to bring this over here, then all you have to do is come down and scroll here, and you'll see in the categories, under Events, Nerd's Cash Flow Projections. In here, there are 6 free blog posts and video tutorials that were meant to lead people up to sort of prepare them for the live webinar I did on cash flows. So soak this knowledge up, soak up this content. These blog posts will teach you about every different aspect of the financial statements, starting at the bottom with the oldest one and working your way up to the top. You'll start seeing and understanding what the statement of cash flows is really all about. And then if you really want to take it further, just come here to my Knowledge Store and look for the recording of the live webinar that I did on Nerd's Cash Flow Projections. This is a download you can purchase in my Knowledge Store for, right now it's priced at $97. It's a 3-hour workshop that walks you through step by step how to project the profit and loss, the balance sheet, and the statement of cash flows so that you can do this kind of analysis on a much more complicated business model. And this way you can anticipate your cash flows looking at the whole picture and make sure that you're going to be able to stay in business. As always, I hope you got something out of this. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web. This has been a special presentation brought to you by Nerd Enterprises Incorporated on how a profitable business can go under. Knowledge is power. Make an impact by learning more. You want private training, additional information about what I've just gone over, or anything else you've ever seen me cover? Call me right now at 866-945-8070. I can log in with you, have you share your screen with me, and walk you through step by step exactly what you want to learn. And I can record the live session with you so that you can review it afterwards as often as you like.